So we're looking here at a short setup in the Black Diamond Trader, Euro US dollar on the daily chart. Now, people will probably ask, why do you use such high time frames? And a lot of times that happens because with higher time frames, you have a higher stop. A higher stop means a lower position size, and most people want to trade with tight stops, high position size. Forex, the spot market, it doesn't trade as cleanly as other markets do. So looking at higher time frames just makes a whole lot more sense. And I'm more of a swing trader anyhow. It just makes more sense to me to leverage not only the money aspect, but also time, where I can let the markets play out in these bigger swings as opposed to day trading. Right or wrong, that's just how I look at it. And I'll be honest, I've never met a scalper or a short-term trader in the spot market that does anything consistently over years. You know, you may have a few good months, and these people end up putting up Instagram pages saying how great of a trader they are. But I've never seen anybody really that has found success short-term in the spot market trading 5-10 minute charts. A lot of traders that I do know that have been around the block, we're talking traders 20-30 years, they're in the same boat. They've never seen it either. So higher time frames just make more sense, that they don't trade as clean as futures do or other markets. So let's just, what we're looking at here, we have a short setup here. Now the Black Diamond Trader calls for limit orders. You would have put an order to sell the market here. At the close of this bar, this red dot shows up. Now I've always said that I would rather trade with momentum in my favor. If this price gets ticked in here, that would imply the momentum is currently going upwards. Well, I want a short. Market going up in momentum up this high would be great, as if this was an area I was looking at shorting. And you don't want to be underwater for too long in a trade. It can cause you to do some pretty silly things. So I have always said from day one, look for stop orders. Put a stop order under the close of this candle. It's not closed yet. You can still put it in. You got lots of room here. It's about 25-30 pips here. Now, I've added something different that you don't see in Black Diamond. Black Diamond will look for stops to go above areas such as this, which is structures. Right? This would be considered a resistance area. And this would be saying, well, if price gets up here and goes above, the trade is no longer valid. For me, however, you could definitely use that, and it makes it a lot more simple. However, if you look down here, I put the ATR. It's just a 14-day average true range. You could simply take 2 times ATR for your stop. So in this case, instead of your stop being up in here, your stop is at 1.1001. So it's in this area right here as opposed to up here. Gives you a lot of room. Yes, your stops are tight. And a lot of people are swayed. They want tight stops. The problem with that is just because a market pops above a certain zone, it does not necessarily mean that the trade is invalid. We'll see that a lot. This is outside the scope of Black Diamond. But if you think about it, you've got, for example, we've got a resistance line here. Price comes up to it. People look to short here, and they decide that they're going to put their stop just above, thinking, well, if it breaks above here, we're out. Well, the problem is markets don't work this clean. Any market. What we get a lot of is, yeah, you'll get this kind of stuff, and sometimes you will get it holding in a perfect breakdown. But more often than not, what do you see? You get this, a break above, and then we break down. So people that are short are getting out right at the exact time that people are shorting. The big money shorts here. Right, Wyckoff has a term for this. It's called an upthrust. And what usually happens is something like this. So if you're positioned short, your stop is here, you get popped out, and it's happened to every single one of us. Well, you just got taken out. So you're buying out of to get out of this market. At the same time, people are shorting. And that's not what you want to do, right? This is just it hides itself inside of structure. And a lot of times what happens is when a market is going sideways for an extreme amount of time, let's just say this is the market going sideways in a little box. So let's just say that what's happened is the price has come down into this, and now it's just ranging. Well, people looking to short, they'll put their stops above here. Well, the problem is, again, when markets range back and forth, you get these pops above and back down. And what's happening here is positions are being accumulated, getting prepared for the breakdown. Now, if it's done right, the bigger money players that are doing this, people will ignore this. And when they finally do decide, well, people are shorting. Now remember, we're looking at Forex here, so we've got two currency pairs, right? If we're going to go short the euro-US dollar, we're looking for dollar strength, weakness in the euro. So people that are looking to go short are accumulating in these spots here. These people are looking for more dollar strength, looking for more euro weakness. So what generally happens is when the markets are back and forth, you get range players, right, during the day, usually getting whipsawed back and forth. But the smart money is accumulating their position. So when price eventually does break out of here, what happens is everyone that's on the sidelines, everyone that has tried to position short and gotten taken out on these, they pile in on the true move. And all that does is just propels us down faster. So ones that are positioned properly, they can rocket to profit extremely fast. So you just basically want to do what the other people don't do, the masses don't do. And you kind of see it in here. If we just take a look here, get this range going on in here, right on top of this green candle. Price is up, explodes down. Well, we're getting the kind of same thing. We're getting a retrace up in here. And if you just looked at structure, right, you're looking at price coming back up into an area that was resistance. I'm sorry, was support, broke support, and now it's testing as resistance, right? Or not. It may not. It might just rock right through. We don't know. But this point here, you can see where the market did. They opened up here, rallied all the way up, and now it's closed here. All right? So you don't need to look at a lower time frame and see what happened. Market was here. Now, we don't know when all this happened. I don't know, unless I look down at a smaller chart, when this market went this high. So what you can see is the market probably trended up for a period during the day, and now it's sold off, and now we're sitting right here. So as a test, I'm actually going to take this trade short right here. My stop is going to be up in this area right here. No, it's not going to be right here, because my trade is still valid in this area here. Again, it's average true range I'm using. I'm not going to use this structure point. A, it's too far away. And B, I'm going two times ATR, which is about 120 pips. So position size is a little bit smaller, and that's where a lot of you are going to get upset and not want to do that. You want a tight stop and get taken out and get, washed, rinsed, and repeated. This is the Oanda chart. I trade my spot Forex in Oanda. I trade futures in other markets at AMP. So we just look down here. This is a stop order that's been placed right here. When this kicks in, my stop is going to be, my protective stop is going to be up in this range up in here. Gives me lots of time. And again, it's only a small percentage of your account you want to risk. This one here is 1.75% of my account. I trade it larger than that. It just depends on what the structure looks like and how the market's doing and what kind of trend we've got. So I'm going to be taking this trade, more of a, it's not a demo trade, it's a live trade. It's just I want to take it so we can I can show you that you can put real money on this and do fine. One more point. We've had a few trades here short, setting up in the euro. But let's just look to make sure that we've got everything. We've got the short set up right here. See how high this is? This dot showed up when this bar closed. Price never got there. If you were shorting, you would have, using stop orders like I say, you would have been in this trade. But looking down here, I'd have to double check that to see if we've actually have a strong trend here. Right? It's got to be above this blue line, or to you that could be close enough. And I've said before, I know some traders that trade this that have reached out to me. As long as they see this going up, they'll take the trade. This short trade here, let's take a look down. Boom, 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 boom. This is a valid trade here. Your stop, geez, where would that have been? Well, according to this, you don't get into this trade. This dot shows up when this candle closed. You would have got on this candle right here. Where your stop would have been, it looks like it'd be way up here. However, using the ATR, you're looking at another about 120 pip stop. So from 109.58, so it'll be up in this area here. And this trade would have dropped down to 97 pips of profit. Depending how you manage your trades. Some people will take 1 times their risk. They'll scale out, and you could definitely do that. You definitely want to have risk management and trade management set up properly. But you'd need 120 pips before you would have taken anything out of this trade. And right now, looks like you're back to break even on this particular setup. But that's just the way the market is. And that's if you took this trade. So that's it. We'll see how this one plays out. And if you want to pick up Black Diamond, click below. There's a link. You can pick it up. And if you have any questions once you pick it up, send me over your ClickBank number, and I'll just verify that you did actually use my link, and I'll answer any questions that you have.